Welcome back to the channel, everyone. Today I want to talk about the CFTC issuing a get out of jail free card and a massive order imbalance in the AMC stock on the New York Stock Exchange. So stay tuned and let's make some money. But before I dive into the video, I just want to give a massive shout out to the 4,400 of you that have currently dinged that notification bell, because you guys are always the first to watch a new video as soon as it's released. So guys, be sure to drop a like down below, subscribe to the channel and ding that notification bell if you haven't already, so that you don't miss another video just like this one. And just a quick one before I dive in with the key information. Be sure to check out the links down in the description below to get yourself some merch, just like this t-shirt, and also to check out the private Discord and become part of the team, and to get those free shares with Moomoo and free trade. And now I want to dive straight in with the key information. So, the CFTC states no reporting obligations for swaps until October 2023. What a ridiculous clown show. The week Reddit finds out they're using these swaps to kick the can and delay the squeeze, the government gives them full anonymity about reporting the data. What kind of world are we living in here? Now, just as a point to clarify, these hedge funds and market makers do still have to hedge for these total return swaps and manage their positions, but they just don't have to report the data, and therefore it's completely anonymous. This basically gives them a walking get out of jail free card. When everything does come crashing down and the SEC and the DTCC and the CFTC do their investigations, they're just not going to find anyone that's committed any crimes because everything's anonymous. While it is important that they do still have to hedge and manage their position, I think that's absolutely ridiculous and absolutely disgusting that the CFTC have just given them a get out of jail free card and they can continue to commit these fraudulent activities. Now let's get into the filing. The CFTC staff provides temporary no-action relief from certain financial reporting requirements to bank swap dealers. The Commodity Futures Trading Commission's Market Participants Division today issued a time-limited no-action letter concerning capital and financial reporting obligations for swap dealers, subject to capital requirements of a prudential regulator under the CFTC's SD financial reporting rules. Under the relief, in lieu of complying with the CFTC's financial reporting requirements and subject to certain specified conditions, bank SDs may report utilising certain alternative forms, filing deadlines and/or reporting standards that are otherwise applicable to them by their prudential or home country regulators. CFTC staff determined that providing the conditional relief on a temporary basis would not adversely impact its ability to monitor the capital position of bank SDs to the extent of its obligation under the Commodity Exchange Act and CFTC regulations. The no-action letter was issued in respect to a joint request received from the Securities Industry and Financial Markets Association and the International Swaps and Derivatives Association on behalf of their SD members who are otherwise required to comply by October 6, 2021 with the CFTC's newly adopted capital and financial reporting requirements. The relief granted by the letter would expire on the earliest of October 6, 2023, and/or the adoption by the CFTC of any revised financial reporting and notification requirements applicable to such bank SDs. Basically, members of the SIFMA and the ISDA complained about these new financial reporting requirements, and as soon as they complained, the CFTC held their hands up and said, "Oh, sorry guys, don't worry, you don't have to comply, you don't have to abide by any of these rules." I personally think that's absolutely ridiculous, and it just goes to show how much of an unfair market we're currently operating in. It basically means that these people that are committing these fraudulent activities are much less likely to receive any criminal charges after the MOAS. Now I also want to talk about this notification that Stockopedia gave this morning. New York Stock Exchange order imbalance of 4.7 million shares on the buy side for AMC Entertainment. So what is an order imbalance? An order imbalance is a situation resulting from an excess of buy or sell orders for a specific security on a trading exchange, making it impossible to match the orders of buyers and sellers. Order imbalances can often occur when major news hits a stock, such as an earnings release, change in guidance, or merger and acquisition activity. Imbalances can move securities to the upside or downside, but most imbalances get worked out within a few minutes or hours in one daily session. Smaller, less liquid securities can have imbalances that last longer than a single trading session because there's fewer shares in the hands of fewer people. Extreme cases of order imbalances may cause suspension of trading until the imbalance is resolved. Order imbalances exist when there's an excess of buy or sell orders for a specific security, Using limit orders rather than market orders can help mitigate some of the problems when buying or selling during order imbalances. Investors can protect themselves against volatile price changes that can arise from order imbalances by using those limit orders when placing trades rather than market orders. Now, effectively what this means is that there's way more buy orders in the stock exchange than there are currently sell orders for AMC. That's fairly obvious because no one's selling their AMC, everyone's just holding and buying more. This is why we've seen on multiple occasions over the last few weeks that some trading platforms in the New York Stock Exchange has completely run out of AMC shares and can't even fulfill small orders of buying AMC shares. We could also see this in the option activity earlier today and yesterday, when at the start of trading there was something ridiculous like 5 times the amount of call options entered into that day than there were put options. Clearly, everyone is very, very bullish on AMC at the moment and not very bearish. That's why there's tons and tons of call options and not many put options, and tons of people and institutions wanting to buy more AMC stock and no one wanting to sell or short. One thing I do find interesting is that there's such a massive imbalance that it was reported by Stockopedia, and yet the AMC stock still went down for the day. You would expect a massive buy-side order imbalance to cause massive price rises because there's tons and tons of buy orders, but barely any sell orders. But I think that just goes to show and just goes to summarise the sheer amount of manipulation that's currently going on in the AMC stock. And this is why I largely try and stray away from talking too much about the technicals of AMC. All the cup and handles and the head and shoulders and the inverse head and shoulders and this and that and that and this. I just don't think it's too applicable right now at the moment because of the sheer amount of manipulation going on. I do think that AMC is still following that trajectory and that cycle theory, and I'm very interested to see how the AMC stock plays out over the next week or two, as I've said in my previous last few videos. If we can break that theoretical 1450 area or the 801 area, which is now our 4850 area, I do think the bears and the shorts are going to start losing control on a massive scale. Speaking of which, I really enjoyed this Reddit post here on the volume cycle again, providing we must be in the third cycle. If you completely remove the price chart and the graph for AMC and look solely at the volume profile, this is what you see. You've got the January cycle here between January and April, or cycle 1. You've got cycle 2 here between May and July-ish. And then you've got cycle 3 here now just starting in September. If you place cycle 1 on top of cycle 2, you can see that the volume profiles are very similar. The reds are obviously cycle 1 and the blues are cycle 2. You can see that when there's peaks in the volume, it's almost at exactly the same time. Especially when looking at number 1, number 2 and number 3, they're basically on the exact same day or a singular day apart. And actually day 4, day 7 and day 8 as well. And then if you paste cycle 3 on top of cycle 1, you see almost the exact same volume profile. When you get the peaks and troughs happening of cycle 1, 2 and 3, they're almost happening at exactly the same time. And again, if you paste cycle 3 on top of cycle 2, again you're seeing pretty much the exact same thing. We're pretty much sticking to the exact same profile. When we post cycle 3 on top of cycle 1 or on top of cycle 2, we can see that so far cycle 3 is only in phase 1 and phase 2. You can see here that phase 1 was the small run up we had to 4850 and phase 2 is now the small cool off. We should be entering phase 3 fairly shortly as well. There's 1, 2, 3, 4, 5, 6 trading days between cycle 2 and cycle 3, so it should be coming around very shortly, as I said, over the next week or two. I am very excited to see what kind of volume we can trade for cycle 3, considering cycle 1 and cycle 2 saw such large volumes. And finally, an Ortex short interest update for AMC. There's currently $4.26 billion worth of short positions in AMC. These positions have caused losses of over $1.2 billion for short sellers since the start of last week. Today, just in the pre-market, short sellers lost over $100 million. Yesterday, losses were $336 million. Yes, throughout today, the AMC stock trended downwards, and therefore those shorts have probably recouped that $336 million loss from yesterday, but they're still down around $900 million since last week. And finally, I just wanted to give you a quick update on the reverse repos. We've now had 15 days in a row of over $1 trillion in that overnight reverse repo facility, just hitting a new all-time high of $1.189 trillion. Guys, be sure to let me know down in the comments below what you think about the CFTC issuing a get out of jail free card. And as always guys, if you enjoyed this video, be sure to check out some of my others. Alternatively, subscribe to the channel and ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.